Whoever is tired of fiat money and is interested in sound money has bitcoins in his wallet. No one needs the digital euro except for the ECB and politicians with a different agenda.
Oh, yeah! Oh, man! Undertaker's got Randy Orton! The Undertaker's alive and well! Be careful who you try to play games with! Oh, my God! Randy Orton! Whoa, the casket! Oh, man!
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Hope you're enjoying your weekend. Bitcoin still continuing to push to the upside. You could basically see what we keep doing is we have these crazy moves that become overextended, right? Then we have the pullback, we consolidate, and then we go up again, right? We come back, we consolidate, and then again, you can see right here, Bitcoin got all the way up to about 38,000. We've come down and we're consolidating again. And it's almost starting to put in, this type of a parabola. So while this is exciting, there are a lot of people that are a little bit concerned that maybe the price is moving a little bit too fast. Now, I will be completely honest. I have been very, very bullish, especially once Bitcoin got back and reclaimed that $17,500 area. We were bullish while honestly, a lot of people were bearish, calling for going down to 10,000 or even lower, right? But right now, we are seeing some momentum shifts that I've honestly haven't seen in a very, very long time. And to be honest, I actually personally didn't expect Bitcoin to get up to these levels as fast as it did, right? Now, we still have a target up around $47,000. Currently, Bitcoin around $37,000. And what's interesting is if you have a look at the log regression curves, we're actually entering into this area, this white area down here, which is above the fair value, but not into the overheated area. So it's kind of like the no man's land of crypto. But as you can see, the potential for movement between the fair value, this blue area, up to this red area is extremely high. And if we just zoom in, you can see obviously we've actually broken the fair value resistance around 35.1. And yeah, this is, if you look right here, the next level, and I know this sounds absolutely crazy, but the next level, if you come over here and you draw a line across, is actually upwards of around $61,156 according to this chart. So I think the thing that a lot of people don't understand is they're saying, well, where did this move come? It came out of nowhere. Well, it didn't really come out of nowhere. I mean, look at this sideways consolidation within this blue band, just under the fair value, right? We tend to have that. And as you can see, basically, since back here, since this massive FTX debacle, we have been accumulating and consolidating in that area. So we're going to get into all of this today, but there's more than just that. There's a much bigger picture. In fact, the SEC and the anti-crypto army have been getting massive pushback. In fact, BlackRock themselves have recently come out and made a bit of an announcement. And we also had a very pro cryptocurrency bill that has recently just come out. So again, you're starting to see a lot of people realize. Now, before we move on any farther, there's a lot of things that I want to talk about in today's video. And we are getting to that area where you're seeing the greed come back in, right? Now, there is, and hear me out here, there is going to be a lot of potential to make a lot of money over the next few years, the next 2 years specifically. I want to talk about that, discuss a little bit of what's going on, because realistically, even though right now in crypto, we think everybody's talking about it, they're not. They're not talking about it. Trust me when I tell you, no average person is reaching out. And unfortunately, they are going to miss these bigger moves. But of course, if you are new, make sure you stick around to the end. I do have a little bit of a warning, and this is just from experience that I just want to maybe let you guys know to help you during this next couple years, which I do think is going to be great. And by the way, just super quick shout out for NGRAVE. If you guys haven't got your crypto off of exchanges, well, if you think another FTX could happen, that's up to you. I don't leave money on exchanges if I'm not trading, but NGRAVE is doing a promotion. It does end on Monday, so if you want to get in on it, you just basically use the link below. You can see right here, we have 1 day and 13 hours, and you will get 11% off. Why did they pick 11? I have no idea. Why not 10, 11%? I don't know. That's the deal that they're doing. If you're interested, you want to get 11% off, use the link below in the description, or you can just enter all one word, Crypto Zombie at checkout. So I don't want to bore you guys with that. If you are interested though, I definitely recommend keeping your crypto safe if you're not going to be actively trading. Now, let's just start with this comparison to the CN10 versus DXY. TechDev pointed this out, and what's very interesting is when you get the this VI plus line, I guess, on this indicator essentially crossing above these area, you tend to get these green dots specifically. this is not an indicator that I use, but as Tech Dev has pointed out, we got this back here, and what happened? Bitcoin literally went up 10x over 4 months. The second time that we got it here, February 17th, so this is June 13th. The second one, February 7th, of 2017, not the 17th. Excuse me, guys. Anyway, that led to a 12x over 10 months, and then the most recent was September of 2020, and that went up 6x over 6 months. So here we are again, getting this signal again, right? So should we be getting excited? What is really happening? Well, the reality of what's been happening right now is not only has Bitcoin and Ethereum been pumping on this ETF news, but the altcoins have been going bananas. And everyone's saying, oh, is this alt season? Is this the altcoin season? Solana's up like 4x or something. This might actually shock you if you're new to crypto. This is nothing. This is absolutely nothing compared to the mania phase. You'll know when we're there. We're in an area where, if you wanted to dollar cost average, I would be careful of overextended moves. But honestly, I'm seeing that momentum. You can see right here, there's been 360 billion in just 30 days added to the total crypto market cap, right? Obviously, this doesn't represent that much in the inflows themselves. It's just market cap, but you cannot deny the weekly crypto asset flows, absolutely massive. I mean, it's just going up and up, and we have officially had more flows already in this year than all of last year, and we still have the rest of this month and all of next month to go before we close out. Now, if you don't think that this is institutions, have a look right here. And we were talking about how it was getting closer and it was getting closer, but now we officially have CME open interest flipping Binance, right? So this is massive, and like Will points out, it's a little bit bittersweet. There will soon be more suits than hoodies, right? Because now it's happening. The institutions are coming in now. They're preparing to allocate for these ETFs. And what else is the signal that's being sent to them? Why are they doing this? Well, I don't know if you guys heard this, but Moody's Investor Service recently made a pivotal move, lowering its rating outlook on the United States government from stable to negative. Okay, so things are not looking too great when it comes to these traditional ways. The shift is rooted in the increasing risk to the nation's fiscal strength, attributed to factors such as escalating interest rates and lack of effective fiscal policy measures. Just close the effing door. I think you know what I'm talking about if you saw that Jerome Powell slip up. That was pretty funny. So they say a negative outlook does not guarantee a rate cut, but it indicates that one may occur in the future. Out of the 3 major credit agencies, by the way, Moody is the only one to keep the AAA rating on the largest economy in the world for U.S. sovereign debt. So this is scaring a lot of people, and they are looking to move into other forms of assets. But like Crypto News Alerts pointed out, which side do you really want to be on?
2007 at the USC Law School, Charlie said, "I'm not entitled to have an opinion on this subject unless I can state the arguments against my position better than the people who are supporting it." The question is, does this also apply to your Wall Street Journal article on banning cryptocurrencies? And if yes, would you care to share the arguments against your position?
Well, I don't think there are good arguments against my position. I think the people that oppose my position are idiots.
Lightning is a layer 2 open protocol for moving Bitcoin transactions in a split second for a fraction of a penny. In essence, Lightning is money over IP. And if you think about the world as it changed after TCP/IP and moving data over IP and then voice over IP, Lightning promises to allow millions of companies to provide transactions in real time with billions of consumers.
And so I don't think there is a rational argument against my position.
Well, his criticisms of crypto aren't totally off. There are 10,000 crypto tokens which are gambling, and I sympathize with him on that matter. But Charlie and the other critics, they're members of the Western elite, and they're continually prodded for an opinion on Bitcoin, and they haven't had the time to study it. If he was a business leader in South America or Africa or Asia, and he spent 100 hours studying the problem, he would be more bullish on Bitcoin than I am.
And of course, I'm not proud of my country for allowing this crap, what I call the crypto shit, it's worthless, it's no good, it's crazy. It'll do nothing but harm. It's antisocial to allow it.
Lebanon, Argentina, Sri Lanka, Nigeria, Venezuela, they all illustrate the plight of the common man, and there's no solution better than Bitcoin. So I really think that, you know, the Western elites, they haven't had the time to study it, but I've never really met someone with an incentive living in the rest of the world that spent some time to think about it that wasn't enthusiastic about Bitcoin.
And the guy who made the correct decision on this is the Chinese leader. The Chinese leader took one look at crypto shit and he says, not in my China. And boom, oh, there isn't any crypto shit in China. He's right and we're wrong.
Well,
and there is no good argument on the other side. I can't supply it.
I don't think I have to tell you which side I'm on. I'm on the side where I get to own the hardest, most soundest money in planet Earth and all that other stuff. And you know who else agrees? Arthur Hayes. Now, Arthur Hayes is the original founder of BitMEX, big leverage trading. A lot of people used to use this back in the day. Not so much really anymore. There's a lot, in my opinion, better options, like some of the exchanges that we use, like CoinCatch or BitGet or Femex or Bybit. I like those personally better. But you know, he points out, he was talking to these people, and he's still holding $1 million Bitcoin price prediction and a $100,000 Ethereum price prediction. He says, Yahtzee bitches. Now, he came out in a blog post, and he further says, and this is the part you got to listen to, okay? Currencies will debase across the globe, and he says the smartest trade is going to be going long crypto. And I think as time passes, more people wake up to this possibility. I was actually just talking to a sales rep. I just purchased a vehicle, and it's crazy how many people still have not actually, you think people have gotten burned, they've dabbled. There are still so many people that have not touched Bitcoin. Like this guy was literally like, yeah, I've heard about it, but I don't really know how to do it, how to get it. I feel uncomfortable giving my information to guys like Coinbase. There you go. There you go. People are still waiting for those traditional vessels. A lot of that money doesn't want to go to Coinbase. They don't want to use Binance. They don't want to trade on Bybit or something like that, right? They want to wait for these ETFs. So he goes on to say that there are other opportunities that are going to exist that are going to be obviously higher returns, but at a greater risk, right? So you get these other layer ones that claim to be improvements on Ether. These are his words, not mine. So, don't like kill the messenger here. He says, take Solana as an example. These all got beaten up real bad during the bear market. As such, they will alleviate off extreme lows and provide great returns for intrepid investors, but they are still all overhyped Me Too pieces of shit. That's what he says. That will not overtake Ethereum in terms of active developers, dApps, and total value locked. Finally, all manner of dApps and their respective tokens will pump. This is the most fun because this is where you get the 10,000x returns, of course, but you're more likely to get rugged when there is, this insane kind of a risk. And, I do just want to chime in on this. Look, I've seen the sentiment so many times before. I'm not going to argue with people. There is a lot of opportunities to make a lot of money during speculation. And of course, these ecosystems will thrive in their own unique ways. But guys, we're going on, well, for me personally, it depends on how you want to measure these cycles, full bull, full bear. But I've seen, in my opinion, at least 3 full-on bull movements, right? With maybe a mini bull cycle. And I can tell you, over all of this time, over the 7 years that I've been in cryptocurrency, you can just see these. This is the Ethereum killer. This is the Bitcoin killer. And every cycle, it never displaces Bitcoin and Ethereum. And you know what? Maybe somebody in the comments is, nope, this is the time that Ethereum overtakes Bitcoin or Solana overtakes Ethereum, right? Something like that. Okay, but it hasn't happened yet, and these ecosystems continue to thrive with layer 2s, etc., which is why, again, I always double down on the blue chips because, and this is the warning part of the video. This is when I start getting a little scared. This is when the greed starts kicking in. This is an Ether rock. This is a rock. It's an NFT. It's a JPEG. This person bought this for 100 ETH, $209,900. This picture of a rock, okay? Then over here, this Bitcoin rock, okay? 3 Bitcoin. By the way, I'm actually cycling through these pictures. It's the same exact put. The shading's a little bit different. So this to me is scary. When I start seeing things like this is when you get worried about the market getting overheated. Now, I'm not saying that tomorrow we're going to have a crash. These things can go a lot longer than you would expect them to. But generally, when the market starts paying $200,000 for a picture of a rock is when I start to get worried, okay? Because that's just dumb money doing dumb things, unless there are these theories that it's money laundering and all this other stuff. I don't really know a lot about that, but what I do know, and that's the warning, just be careful and don't buy $200,000 pictures of rocks. I mean, do what you want. That to me is silly. If you had 3 Bitcoin, I would just hold your 3 Bitcoin. That's my opinion, not financial advice, but you want to buy a $200,000 picture of a rock, go ahead. I'm not going to be doing that. But I digress. I could rant and rave about stuff like that all day. What I do want to talk about is this major shift, and we have not ever seen anything like this in Bitcoin or crypto, which is why sometimes it's fun to look at the past cycles. I like to look at the analysis, but it really genuinely is different this time. So you have BlackRock and all these other guys, doing these spot ETFs, which we've never had before. You have political candidates talking about it, Congress talking about it, countries putting it on their balance sheet, and BlackRock has now directly challenged the SEC's stance on spot crypto ETFs. They argued that the SEC's preference for specific actions is irrelevant. Their bid for an Ethereum ETF gained validation, directly questioning the SEC's reluctance to greenlight crypto ETFs, while there's all these futures which are running rampant, which if you think about it, are actually worse, right? Because you don't have the underlying asset. So, and Gary Gensler came out himself. I showed you that video before he was chair. They caught him. I mean, he's saying how ridiculous it is to have futures and not a spot. And yet today, here he is sitting in the chair, and we still don't have one approved yet. A notable argument was the confidence in the market surveillance conducted by the CME. There's no logical basis for denying the application. Market analysts, by the way, are anticipating a breakthrough because they're going to run out of reasons, because you can't keep rejecting something on the same basis if the court overturns it. So that's why they're saying there's about a 90% chance that we get this before January 10th. But I wanted to play this clip where Elon Musk is kind of just, talking a little bit about the corruption of the SEC. Let's just be honest here.
But not once did the SEC go after any of the hedge funds who were nonstop shorting and distorting Tesla. Not once. They would lie flat. The hedge funds would lie flat out on TV for their own gain at the expense of retail investors. Not once, literally 1,000 times. Not once did the SEC pursue them.
How do you explain this failure?
The incentive structure is messed up because the lawyers at the SEC are not paid well. It's a fairly low-paying job, but what they're looking for is a trophy from the SEC. They're looking for something they put on basically their LinkedIn.
Yeah.
From that, they can get a job at a high-paying law firm. That's exactly what the lawyer here did. And the reason they don't attack the hedge funds is because those hedge funds employ those law firms, and they know if they attack the hedge funds, they're affecting their future career prospects. So they sell small investors down the river for their own career. That's what actually happens. Regulatory capture.
Regulatory capture.
Yeah.
And while you do have clowns like Gensler and, Warren that are coming out and being anti-crypto, there are a lot of other pro-crypto, politicians, whatever you want to call them, senators in this space. One being Ted Budd, who's introduced a new bill which actually opposes everything that Senator Warren is trying to do, which is the Keep Your Coins Act. He's trying to protect self-custody. They want to actually allow individuals to be able to hold their own crypto in their own wallets, in a ledger or an NGRAVE or a Trezor or whatever you want, a paper wallet, right? And I believe you should have the ability to do that. I don't want to trust my crypto to a third-party exchange. Look what happened with FTX. I don't trust these exchanges, even exchanges I talk about on this channel. Look, I do my due diligence, but I don't know. Does anybody really know what's going on in the background? Like I said, if you're not actively trading, there's no point in keeping your cryptos on the exchange. But, they say consumers are facing new challenges and risks, but this approach is going to promote financial freedom. And, I salute you, Ted Budd. I believe that is the purpose of Bitcoin. And it's not going to work anyway. It's not going to work. It's going to be, if they tried to ban it, they would fail it anyway. But, it's not just in the US. Look at this. So you have a member over here of the German parliament speaking about how bad CBDCs are. And look at this. She's got a Bitcoin shirt on. So I'll play this clip. It's mostly about CBDCs. If you don't want to watch it, just timestamp, just, kind of skip it. The most important part is like the first 30 seconds. But I mean, look at this. It's even spreading to places like Germany.
Whoever is tired of fiat money and is interested in sound money has Bitcoins in his wallet. No one needs the digital euro except for the ECB and politicians with a different agenda, namely the total surveillance of citizens. I know, much is promised, data protection, everything secure. No one intends to spy on anyone. This is as credible as the promises made during the euro introduction: no bailout 3% rule, prohibition of monetary state financing. Now the ECB does nothing else, and the Maastricht Treaty is waste paper. Today, the ECB promises top data protection for the digital euro, and tomorrow every transaction will be monitored, citizen fully transparent. In China, people are controlled with digital central bank money. Those who comply with the state have access to money. Those who don't do that, unfortunately, had bad luck. Social scoring is what it's called, with the digital euro easily possible, like state control. Book another flight, CO2 budget depleted, donating to inconvenient orgs? Impossible. Dining out unvaccinated in a pandemic? The funds will not be released. A digital nightmare. And that is the reason why we do not require a binding vote on how. Don't need the full digital euro. That's what the federal government must aim for. Thank you so much.
So again, talking about these parabolic runs. Now, I did not personally think we were going to be going into a parabolic run. It's just not really common to see this type of a move in Bitcoin. But again, this is not common, what we're going through right now. The whole landscape is changing. And you have Corey Mitchell, he's an analyst at Trading Biz, and he says that Bitcoin prices could regain their all-time high by mid next year, he says, as they undergo the acceleration phase. And that is the mania phase, and that's the scary phase. That's when you have to really look back and be like, did I really do everything that I could? Did I sacrifice enough? Was I too busy out partying and wasting money, or was I accumulating Bitcoin, during this time? And you guys know my story. I mean, you guys know my story. I sold my house, rode a bike for 2 years, whatever. It wasn't fun. It wasn't fun at all, but it paid off. You know what I mean? And I don't think you're early. And wait till the very, very, very end of this video. And I got a little story for you guys, and I'll explain to you why. So he's talking about these uptrends. They move very quickly. They move hundreds of percents in less than a year. And he says the really big gains happen a year and a half after the bottom, meaning the near 90-degree price surge. So just to kind of like look at this and, just the numbers, in 2013, we had a 1,200% rally in 100 days. In 2017, we had a 1,900% rally in a year. And in late 2020, we had a 400% rally in about 140 days. So these moves happen quick. They happen suddenly. So again, when you have a look at this and, you look at us in breaking out of this fair value area, it doesn't mean that we have to go necessarily to the top. In fact, these mid-cycle rallies are very, very common. For example, back here, you can see the very early cycle right here back in 2017, right? We had this bear market, and then we had this rally right here, which you could say, even though it was higher, it was a mid-cycle rally, where then we had a massive, massive 80% plus correction, and then we reached the top of the red zone up here. Same thing that happened, if you guys remember, the 2017 bull run, which, by the way, had multiple 30 and 40% pullback. So we're going to get a 40% pullback, and then all the bears are going to come out and tell you, oh, I told you so, I told you so. To the idea of Bitcoin being at 15,500 and you waiting for the pullback to 10, but meanwhile missing out on the entire 110% move, absolutely mind-blowing to me. But as you can see right here, same thing, cycle came down, bear market, we had a mid-cycle top here, and then we came back down. So is it possible that we have a bit of a mid-cycle top up here? Could we actually go all the way up to that $61,000 area, only then to have it retrace all the way back down to this 35K area? That would be like, almost a 50% drop, and then they would be telling you Bitcoin is dead. But we have seen this happen time and time again. It's very common for Bitcoin to do this. Maybe less likely now with higher liquidity, but, anyway, just getting on right here. Good thing over the weekend, we don't have a CME futures gap. In fact, I want to get rid of this one right here. I'll keep this one down here for now, even though I don't think this one counts because we made a new one while closing one. I think this is an exception to the rule. But as you can see, futures markets are pricing Bitcoin at 37,500, which is higher than the price that's trading right now. So as long as Bitcoin doesn't go over 37,500 this weekend, we don't have to worry about that CME futures gap, and we could continue to potentially close above this parallel channel. Now, we did have a fake out here to the downside. We could have a fake out here to the upside, right? We could continue chugging along, building up, maybe putting in some kind of a triangle formation pattern. But the likelihood of Bitcoin falling lower than 25,300, that's really, really going out the door, guys. I would say, if you're lucky, you might get a $28,700 Bitcoin. But the more likely thing, if we did come down, would be to retest this heart line and continue a little bit sideways. I know that was an ugly drawing, but you guys know something more like this. Okay, more bouncing around, whatever. Putting in more consolidation, right? We come up, we retest, up, and then same thing. And that's what we're doing. We're just continuing to move to the upside. And one of the most amazing things that had happened this year for Bitcoin that I had pointed out, which we had actually never seen before. I know people like to joke in the comments about like the titles of my thumbnails, like, oh, we've never seen this happen. Well, there are like a lot of things that happened in the past year that we literally never saw happen. One of them being this intersection that we had right here on all of these major moving averages. I mean, guys, this right here, do you see this cluster? Do you see that right there? That had to be possibly one of the most bearish moving average crossovers, I mean, literally, Bitcoin has ever seen in its history. Never anything that aggressive. What happened? Here we came into it, right? So these are weekly candles. So in 1 month, Bitcoin fell 22%, right? We fell from 25,000 all the way down to 19,471. And what happened? We got bought back up instantly in that week. And then look at the next candle. Look at that candle, guys. That was, if you think that they were waiting for lower prices, they were waiting for the retest, all the guys that missed out on this bottom right here, that was what they waited for. And they bought it back up. That is the, whatever you want to call it, capitulation wick. I mean, this is a capitulation wick, really, technically. But you understand what I'm trying to say? Incredibly bullish buying. And from there, we were actually able to stay above all these averages. Now, you can argue that, yes, we may have this, we did have this death cross, but everything else shifted. You're having a golden cross on the 50 over the 200 EMA. You're leading into a golden cross with the 21 exponential over the 100, and it's most likely probably going to end up flipping over the 200 as well. And what do you get when you get those types of moves? Look at this. You get massive price movement. So basically what you want to see is this order. I should have probably colored them in the rainbow. I didn't, but you want to see red, orange, blue, yellow, green. Red, orange, blue, yellow, green, right? We don't have that yet, right? We don't have that yet. But look at how swiftly these are approaching. Look at how fast these are attempting to make that flip, right? So as Mustache had pointed out, just looking at this simple 20, let's get rid of all the crazy indicators. Just look at the 20 right here and having a look at the M chart of Bitcoin. What you can see is that we had this fire. Why it didn't fire here, I don't know. I'm not really sure. Maybe it was COVID. Maybe it made it weird. But you can see right here in 2016. And I mean, look at that. Look at that, what happened, guys. So that's what's happening right now. Again, history doesn't have to repeat. It often rhymes. Now, we are in this blue zone area. So it's a little bit bigger because, obviously prices are higher. They're getting bigger, right? We're going from 30,000 to 60,000. But again, the percentages are roughly the same. They're just the larger numbers, right? But the percentages are still the same, essentially. And when you're looking at this area of interest, this blue zone right here, what we're afraid of is hitting an area here where we get a major rejection down, right? But the thing is, because we've waited so long, because it was such a prolonged bear market, these legacy trends right here, this line, and this mini spider line that started here are very, very close. So this is why I'm looking at a top at around 41,000 potentially for this move. But as you can see, look at how we tried to break above that on the weekly, and we've since pulled back, right? So if you were to have a pullback, you could come down to some of these levels. Again, the worst would be coming all the way down here, but what are the odds we're going straight down? I don't think that's going to happen. So if we were to do something like we did back here, and remember, you can't really count COVID because that wasn't, no one could really have anticipated that. you know, we retest the yellow, or, you know, the green started here. So if you think we have to go back down to that level, you know, maybe by the time we actually fall down there, you know, we're still above the 25,000 area, which, you know, at that point, it would be another amazing opportunity for buying. And the same thing here, I showed you my targets 47, but what we do have is this massive volume range right here. This is a lot of interest, guys. And, you know, calling for these crazy levels, I don't care what happens with the recession and all this other stuff. You're not going to see all this accumulation and then people that have been holding and buying for multiple plus years, and then it's just going to go back and then they're going to be like, you know what, I'm going to sell now. If you've had conviction to hold for 2 years, or your institutions that have been accumulating at these levels, these institutions, they're not degens. They're not looking for a 5%. You know what I'm saying? Well, I'm sorry. I guess a degen would be looking for like 100x. So they're not looking for 100x, but they're also not looking for a 5-10%. They're looking to put something on their, you know, balance sheet, or something to put in their investors' portfolios of their hedge funds, and ride this thing out for a very long time, right? We've explained to you multiple reasons why the whole BlackRock conspiracy about, oh, they're going to crash the price. That is the most illogical, stupid thing I've ever heard. And I am like a conspiracy theorist. Trust me. Like I don't trust anything that anybody tells me. But that is just completely asinine. These guys care about their reputation, and they're not going to, they just wouldn't do, it just doesn't make sense. They wouldn't do that if you look at their track history. And again, you know, looking at the money flow, looking at, you know, this momentum, it still just looks to me like we're going to continue moving to the upside. I do think, though, that we are getting a little bit in the overheated territory personally. I think we could have that push up to around 41,000, but I would be getting really, really cautious after that area. Okay, guys? But, excuse me, I just wanted to end on this post from Decode Jar. So, and this is an amazing just thing to end on. So, February 2021, I bid a property auction that ran hot above my max, and I told the real estate guys I'd sell some Bitcoin to cover it. A few months later, after Bitcoin crashed 50%, I bumped into the same guys and they said they were all in. Red flag. It should have been obvious to me right then and there that it was going to be the last rally for a while, and it was. 2022 was brutal, and I am reminded of the story of Kennedy and the Shoeshine Boys. When people that are not natural investors piling in, the game is over, but I don't see this behavior today. No one is bullish outside of crypto Twitter. Existing bag holders, mom and pop capital is staying in the bank earning interest. SBF guilty with 100 years in jail on the front page news, bringing back painful memories for many. Retail is still licking its wounds, and with inflation pushing the cost of living much higher, the risk of re-entry is too high for most. No euphoria, no Shoeshine Boys, no top. We are just getting started. Bitcoin. So, you know, Shoeshine was like they were giving them the tips and stuff, right? So I just want to end it there, guys. We are in fact still early. It is an echo chamber, remember. But you know, once your Uber driver starts asking you about crypto and Bitcoin, well, maybe then it might be time to get a little bit more concerned. But again, guys, if you are looking to trade, I do recommend CoinCatch, Femex, Bybit, although they have KYC now. Apex Dex is great. Apex is actually so easy to use once you learn. It's honestly one of my favorite places, and the fees are like 30 cents. So check that out in the description if you want. And also, if you do want the 10% off on the end, or the 11% off on the NGRAVE, make sure that you use the link below. Or if you guys want, just enter the code CryptoZombie on checkout. So ultimately, that is it for me. Thank you so much for coming back to the channel. Hope you're having a wonderful weekend. I love you guys. I'm going to be doing some traveling, so make sure you turn on the bell notification. Check out the tutorials popping up right here, right now. Until next time, stay crypto, and of course, peace out.